lateness today. Essentially, we're just going through the CSL and CBA earnings, which I'll have a quick summary run through towards the end of the morning call. But in the US overnight, soft retail sales numbers really spooked growth investors. Jobs numbers looming overnight. Just really, it was a very mixed night, I've got to say. You saw the semiconductors and things give a little bit back. But look, I mean, as you can see, unless you're red-green colourblind, that's a pretty just speckled mess, basically. There was no major announcements, but those retail sales numbers, I think, were a little bit shocking because they're usually quite, people tend to stretch themselves over the holiday season, and to get that holiday weakness over a holiday season means that, they're not. I mean, people aren't exactly saving for something in February, so that's just they're not. It's not generally a very good sign for the year ahead when you have that softness. So, but the likes of Costco and Walmart gave a little bit back, and Amazon, etc., as well. We got payrolls coming out tonight. It is expected at 60,000, but there has been a comment from Kevin Hassett, who's the White House sort of liaison with. In terms of the economy, and let me just get the quote exactly right. Lower jobs numbers shouldn't trigger panic. So, I mean, if anything loomed large really to make you think that there's going to be a reason to panic, it's that, because those guys would have got those numbers considering they were due out Friday. And the government shutdown, as far as I could see, doesn't really affect their release, but they managed to affect their release. So perhaps they were waiting for the market to calm down because it was Thursday. And if you recall, we had that bounce back on Friday. So financial press, don't let it deceive you. Everyone's quoting the Dow. No one cares about the Dow. It's a money-weighted index. Seriously, investors know it, but basically anyone from financial markets, no one is looking at the Dow. But because it's the one that's grinding out a gain over the course of the week, financial press is really focusing on that. What you need to be focusing on is S&P 500 is only up 0.36 for the week, down 0.33. Nasdaq's down another % after last week's worst week since last April. And the Russell's doing okay, but S&P and Nasdaq is what everyone's been focused on for the last 3 years with these AI gains. The Dow's lagged massively. That's just financial markets trickery to try and convince you that everything's going okay. It's eking out record highs. Yes, it is, but we haven't used the Dow methodology and to track indexes. Oh, God knows, for decades basically. It's just the one. It's like the All Ords versus the ASX 200. It's not the one that we use anymore. It's a little bit old fashioned. So yeah, ASX was largely flat. Nikkei just continues its ridiculous run. Everyone's really frothy over Japanese equities at the moment, and there'll be some more money coming back from that yen carry trade. Bond yields should have supported the growth stocks last night because they fell, but it's starting to finally sink in that economic softness is not a good reason to buy stocks, even though it's going to lead to lower interest rates potentially. Bitcoin resumed its fall, down about 10 for the week, but not as bad as what it was. I mean, I definitely expect volatility in all of these, lithium, uranium, Bitcoin, platinum, silver. They've all still got silly volatility in ranges at the moment. It's up 10% one day or one session, down 8 the next or whatever. Until, for those of you who watched yesterday, you really want to be looking at where it settles in the range rather than the tops and the bottoms of the ranges. That's just really algos hunting for investors' stops at lows and highs of markets, which they have successfully done, particularly in the likes of silver over the last few weeks, etc. So they'll be doing very similar in Bitcoin. There was some fairly high volume go through at the end of last week. I dare say if you're a Bitcoin fan, you'd be dollar cost averaging, I would suggest, at these prices. But we've got CSL and CBA today, 7 Group Holdings, Evolution. We've got RBA Hunter speaking at some stage today, employment tonight. AMP, Pro Medicus, Temple & Webster, Northern Star, etc. tomorrow. Key inflation data out of the US on Friday as well. John Deere might be one to watch out for, but I think all eyes are going to be on that US employment. CBA wrap up, essentially. So Matt Commons quote here: "The economy strengthens. We're using our leading technology and balance sheet strength to support customers while carefully managing competitive intensity and margin pressures across the system." Absolutely 5 stars for CEO, standard CEO response there. He's a very good operator and knows the business. Worked his way up through the ranks. Earnings per share trajectory was roughly about expected. Dividend per share was roughly about expected, just slightly positive. Net interest margin was expected. Costs went a little bit higher than expected, but there were some analysts that really thought that that was going to happen. Valuation, despite the fact that it's rallied this morning, where analysts expect the stock to be versus where it is, it's up a few percent today. Growth trajectory was actually a pretty big tick. That valuation, I probably should have put the green neutral, really, to be honest, because things like Fortescue and things like CBA particularly, and BHP to a certain extent, they always price way lower. So CSL managed to, I don't know, they need to maybe come up with a vaccine for shooting themselves in the foot. So their CEO's retired 5 minutes from the close yesterday. That's triggered a 5% downturn. It was trading up 184, finished at 171, down this morning as well. They've gotten rid of their CEO, and Mackenzie began the acceleration. They've handed over. But so CEO stability, not great. Underlying earnings was neutral to negative, but capital management and earnings trajectory were positive to in line, and then that guidance was a tick. The market's hating it, but we were just discussing here, and in the office, I mean, the CSL is repeatedly getting belted on exactly the same news over and over and over again, and this, it is just. It's basically not ridiculous, but it's. I'm searching for a word that's not going to offend people, but it's ridiculous essentially. All of this is in the market except for the CEO transition. The guy's been there for 3 years. They've had one of their worst years from a share price standpoint. The axe has got to fall somewhere. To be honest, I think it's actually a positive overall. So look, I mean, I think it's probably a really good buying opportunity, particularly if you don't have CSL. Vaccines, the anti-vaxxers were kind of winning the war over it, but then in New York, they've had one of the worst flu seasons, so vaccines will be back in vogue again. The best cure for weakening vaccine demand is, people dying of the flu. So I would expect, and that split up of the business, it is, half the reason I'm late this morning is it's incredibly difficult to go through their earnings because they've got so many businesses. I think is a positive long term. So look, but markets, they just love to feed into negativity. If you've got a 2-year time frame, go and buy yourself some today. General advice only. I don't know what your positions are or what your financial goals are, etc. But I think that market as it's doing on so many levels in so many stocks, because there's a lack of mid-cap fund managers and everyone's just benchmarking to the ASX 200 or going to ETFs now. There's just no volume or mid-cap to large-cap support for any of these stocks, basically. It's the fund manager. ETFs are sort of killing off the fund managers who would normally take the other side of this and have an opinion, unfortunately. So it will just beget more index selling, I suppose, but and garner less support. So if you're interested and you're sick of the volatility and things like CSL, we've got 2 fixed income or fixed coupon note investments that'll close next Wednesday, the 18th. If you go to mpcmarkets.com.au/fixed-coupons, there are YouTube videos explaining the investments. There's an explainer about what fixed coupons are, pretty similar to hybrids, but but obviously pay a fair bit higher. They're paid in cash to your bank account every quarter. 9.8 or around the 9.8 for the banks, 12.23 for a good basket of downtrodden stocks on the ASX, which are pretty blue chip. And there's investment documents there. You have to be wholesale S708 qualified, but if you're sick of riding the volatility in dividend stocks, etc., and you just want to get double-digit per annum returns, these are the best thing. These are our highest selling products by miles here at MPC over the last 18 months to 2 years. So go and have a look, and and if you retail at some stage over the next 6 to 12 months, we will be running a retail intake for those. It probably just won't be as good a coupon rate. So and look, for less than a coffee a day, get your recommendations, for stock recommendation services, content, podcasts, education, news, all in one place. It's available on desktop, App Store, on your phone, Google Play. Keep up to date and make sure you get these company updates and stock recommendations, etc., coming to the palm of your hand with really quick and actionable updates. Not the ridiculous 40-page investment things. It'll be very timely updates on your earnings of what's in your portfolios, like CBA and CSL this morning. So you can actually make a decision when the market opens, as opposed to find out in the newspaper the next day. So scan there and sign up now. Have a great day, everyone. And if you want more detail, just have a look on socials for our earnings updates for CBA and CSL this morning, and you'll get a little bit more meat on the bone in terms of what's actually going on, and make your decisions from there. Have a great day, everyone, and we will speak again tomorrow.